Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. Today it's August 12th, 2025, and we've got Bitcoin, Solana, MicroStrategy all starting to move up, and Tesla is on a little bit of a tear right now. But first, remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. So with no further ado, let's dig right in. Today, I'm actually going to start off with the CPI and interest rates because those numbers just came out a few minutes ago. About 26 minutes ago, the core inflation data came out, and you'll see core and regular inflation data. And you'll see the core inflation month over month was exactly as forecasted at 0.3% increase. Last month, the last time the reading came out, it was 0.2. Core inflation year over year was 3.1 compared to a forecast of 3 and a prior reading of 2.9. So core inflation is heating up just slightly. We have the inflation rate month over month was right as forecast, and actually less than the prior month. And finally, the inflation month year over year, or the inflation rate year over year was 2.7. It was 0.1 less than what was forecast at 2.8 and comparable to last month. So all in all, kind of a nothing burger. It was pretty much flat overall when you're looking at this inflation data. The only one that's maybe a bit alarming is the year over year did increase from 2.9 to 3.1, and they thought it was only going to go up to 3. We know that this data is not correct anyway. If you want the real data, you need to go to Trueflation for the real data, and it's been reading below 2 for the last several months now, if I remember correctly, on Trueflation. On the right-hand side, that is on FedWatch, CME FedWatch, and those are the target rate probabilities for the September 17th meeting. So now there's a 91% chance of a rate cut at the September 17th, 2025 meeting. A month ago, on July 11th, the chance of a rate cut was only 57% for a quarter point, and 3% for a 0.5% rate cut. So about 60% chance of a rate cut before a month ago. And now 1 month later, it's a 91% chance. So this is almost without fail accurate every single time. So it looks like we're going to finally get that rate cut in September. Now let's dig into the charts and see what the charts are telling us. All right, so you'll see here on the Bitcoin TABI model, the TABI model is still light orange. Light orange is not surprising. That is typically what we see at this point in the cycle, right? We're not significantly overheated yet, just a little bit overheated. Yellow is neutral. Anything cooler than that, like the greens and blues, mean that it's below normal or below kind of the mean, let's say, and the TABI model goes light orange, darker orange, light red, dark red. So we still have a little ways to go there. You'll notice the Meyer multiple still here in the 1.5 range. You'll see the MVRVZ is sitting at 2.3, 2.5. So still not overheated on MVRVZ. And something else that I added to the chart this week is historical volatility. So you've been hearing probably that the volatility is gone in Bitcoin. What do they mean by that? Well, let's open this up and take a look at historically. You go back into 2021 and you had readings in the over 300 range. Okay, that's an anomaly. Let's get rid of that. And even at the end of May of 2021, you had readings of 150 on the historical volatility. Think of this as implied volatility right here. You've got readings regularly hitting 100 before. So that would be that you'd hear them say Bitcoin has a 100 vol or a 75 vol or a 50 vol, right? You hear Saylor talk about that a lot, how MicroStrategy has a really high vol. Well, we're like down in the 25 range, not even at 25. The latest reading is 20.86. You can see that the volatility on a historical basis, if I go back as far as I can go on this chart, you'll see that historically it was in the 75 to 100 range, 150, 200 all the time. And now it's pretty flat. We've had a couple of wicks up to 100. We had one back in March of 2025. We had one in August of 2024. Sorry, March of 2024, August of 2024, kind of ironic, same day last year. And then on March of this year. So March, August, March, significant volatility of 100. Other than that, the volatility has been relatively flat since April. We had that huge move down in April 7th, around the tariff tantrums and all those things. So we had that giant wick down, and that caused the volatility to spike, right? Because it's unknown how far this thing's going to move. And then since then, it's just been like beep, flat. Very little volatility. When there's very little volatility, people get lulled to sleep and it looks relatively boring. And there's that big wick down the first time in March, and then the second one in April. That caused those bumps that you see down here in the historical volatility on the TABI model. Moving right along to the daily chart. Daily, our uptrend is still intact since April 7th. You see that in the linear regression channel. We are working through this significant support and resistance that's sitting right at $118,000. Every time we get above it, we immediately wicked back down below it. We've been trading above and below 118 ever since July the 10th. So for about a month now, we've been just forming what I would call a bull flag. We are flat on the volatility. Mean reversion spiked and is back down to pretty much at the mean, slightly above the mean. Same thing with RSI. And the global liquidity, if we blow it up, we'll see we have flattened out. It spiked back here on July 1st. It bottomed back down here on July 31st and has since leveled back out again. It seems like this level right here, right at 99 trillion, that is the level of support. We can even put a line in right there, and you can see it's going back down, supporting on it, breaks below it, comes back up, resists on it. So we're supporting right around there at 99 right now on the global liquidity. I think I'm going to get rid of that line because it makes it harder to see the yellow one. On Bitcoin, resistance to the upside, all-time high, $123,000. Support to the downside, down in the 110 to 112 range. We talked last week about how we filled that gap in. You can see that there is some volume there, but there's still a little bit of a gap down here at 112. Could we revisit that again before making the next leg up? Absolutely. Anything is possible. On the 4-hour chart, you'll note that we are overheated to the upside. We are mean reverted to the upside. There is a sell signal showing up on the mean reversion. We were RSI over 70, MACD crossed over right here on the 11th, and that coincided with a sell signal on the confluence model from IADSS. So again, current point of control right here at $118,000. Support to the downside at 112, could wick down to the 110 range, but if you look back, we basically were going up to 111, 110, 110, 111. So 110, 111, definitely significant support. You can see how we bounced off of that the last time. Immediate support to the downside, 114. That is the 50-day moving average. And then we have this linear regression channel as well as the 78.6% fib at around 113. And then, like I said, we've got this 100-day moving average creeping up, and it's almost to $110,000 right now. I would personally say that's the immediate floor. Things look better to the upside for Bitcoin right now than they do for it moving to the downside. That's on the 4-hour chart. On the Solana Bitcoin chart, it's been relatively flat, okay? And what do I mean by that? Look at the historical volatility of this pair, going all the way up to 0.0047 and all the way down to a low of 0.00047. That's a factor of 10, guys. That's a 10x from top to bottom right here. Then we spiked back in March of last year. Since then, we held steady all the way through until about January of this year, and then this dropped off. And it dropped as low as 0.0012785. You see this white line that I drew right here. Notice how that has been historical support in the past. That was support back in 2022. It was support, or it was resistance here in 2023. We beat up against it for a while before we finally broke out. Let me zoom in. The white line is what we're looking at right here. We basically couldn't break through it, finally broke through it and came back down and just about retested it right here. And it looked like we were smooth sailing, going up, 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 up. Next thing you know, we break down. Where do we break down to? The white line. Where do we break down to again? The white line. So that white line of 0.0012785, that means that for every one Solana, you would get 0.0012785 Bitcoin. That seems to be the floor. That looks like a good place to swap Bitcoin for Solana if you believe that Solana still has a really strong move in it. Think about it. Bitcoin dominance has been very, very high for the last year, 2 years really. And now all of a sudden Ethereum is really starting to move, right? ETH is on the move. It hit 4,400 today. It is looking to make a new, that might have even been a new all-time high, but it's looking to make a new all-time high. Typically after ETH moves, the rest of the altcoin market follows. So I do see this coiling up. You notice that on the mean reversion, it's been flat almost all year, except for the spike at the beginning of the year and the decrease here in February. We had a spike and then a drop. Outside of those two moves, everything else has been less than one standard deviation to the up or down. This pair has been flat. And so it is coiling up with a likely move to the upside, somewhere back up into this 0.002 range, which from where we are right now would be exactly to 0.002. You're looking at about a 34-35% move to the upside. So there is some signaling going on suggesting that we would go from Bitcoin into Solana, especially for those of you that have very large Bitcoin bags and very little Solana. This may be the time that you would want to do it. Not financial advice, just friendly advice on what I'm seeing on the charts. On the Solana daily chart, what do we see here? We see we're still in an uptrend ever since back here in 2022, right? The uptrend is still intact, but we've retested the bottom of the channel in April and again here on June 22nd. Solana has been relatively weak again when compared to Bitcoin. It doesn't mean that all hope is lost for Solana. It's just taking a little bit longer to get going. I do see the credence in what Marty Party and James have been saying from Invest Answers about the Wintermute transactions and the fact that Binance has been sending Solana tokens to Wintermute to who's a market maker, to try to control the market, to keep a lid on things. It's almost as if they're trying to keep pushing that beach ball down underwater, and eventually when it pops, it's going to spring high to the upside, right? So I see us making a new all-time high with Solana before the end of the year. It's just going to take a couple of tries to punch through. We see a very, very clean retest of the 200 and 100-day moving averages and the 50. Notice all three of them converged here on August the 4th. We spiked to the upside, came back down and supported. That's where we were last week when we were talking. We were supporting on the 200-day, a perfect retest of the 200-day moving average, and then pop back up again. So right now, if you want to know where significant support is, I would say it's around 162 because that's where we bounced from the last time. Could we go as low as 160? Because that's where the 200-day moving average has gone down to 159, 160. Yep. Could we also support up here on the 50-day at 167? Absolutely. We have done that historically in the past. You see here where we supported on the 50-day, here where we initially started to support on it, broke down, got back up above the 50, and then lost the plot until here where we finally broke back up above the 50. So it's not unusual to go break above the 50-day moving average and then come back down and retest it from the upside. You can see it's super clean on the 4-hour chart right here. You can see where resistance right now is right here at 185. 185 is the number. You can even go back and look historically. It was 185 back in May on 2 occasions. It was 185 back here in February. 185 was the support back here. You can see in January, February, even into December. That 185 is the line in the sand, guys. It's been support and resistance over and over again for just about the last year. So what would be very bullish? Break above 185, come back down and retest it from the upside like we did here, and then continue upwards instead of breaking back down below it like you saw happen back here at the end of July. So 185 resistance to the upside. After that, it's 200, which is psychological resistance. We are coming off being mean reverted to the upside, but have reset to the mean. Same thing with the RSI is back to neutral again right here. So things looking good for Solana to be leveled out where we are right here, right around 175, 180, and to look at moving back up again. Tesla. This is the Tesla daily chart. On the daily chart, still in a downward trend overall, right? But it's pretty weak, this linear regression channel, so I don't place a ton of credence in it. And what do I mean by a downward trend? Notice we're making lower highs. Each one of these each time has been a lower high. Now, we had broken out above, so this breakout right here was higher than the previous high. However, we have not held that high. Notice that we've pulled back a little bit. And actually, we are still holding it. There's the red dotted line. Sorry, my eyes are messing with me. So could we have flipped the trend from going down to now starting an uptrend to the upside? And the answer is yes. Let me zoom in on that so you guys can see what I'm talking about. It's really hard to see. But notice that right here, we closed yesterday on that candle right here. The body of the, yesterday up to here. Monday here. Tuesday hasn't started yet. So Monday right there, there's the close at 339.03. That is higher than these highs that you see back here, July 21, 22, and 23. That close is higher. What I would love to see is for us to close the week higher than these highs right here, which would mean up in the 350 to 360 range. That would be super bullish. It gets us back up above the 61.8% fib level, this 340 that has been our nemesis for a while. You can see back here it was resistance. We supported on it over here till we broke down. It was resistance again here, broke back below it, resistance again here, broke back below it, resistance there, resistance again where we are currently. So we need to break through the line in the sand. That is 340 to 345 with Tesla. On the daily chart, you'll notice on the 4-hour, we are very, very, very mean reverted to the upside. If we want to put a number on it, we are at 2.01. The last time we were at 2.01, that's only 1.8. We would have to go all the way back here. That is still not at 2.01. There we go. We have to go all the way back to October 28th to be more than 2 standard deviations mean reverted to the upside on a 4-hour chart. That looks top heavy to me. I would not be surprised to see it sell off just a little bit. Again, it's not that I'm not bullish on Tesla long term, but in the short term to sell off and come back down and retest the 200-day moving average before screaming back to the upside, that seems like the most likely path of attack for Tesla versus just continuing to go to the upside in this mean reversion, all of a sudden going to like 3 standard deviations to the upside. I don't see that happening. I could be wrong, but we are facing significant resistance, like I said, here in this 340 to 360 range. That we got to break through that to continue to move to the upside. MicroStrategy, again, the chart looks kind of funny because I have the MNAV on here. The MNAV right now with MicroStrategy is shite, as they say. It's crap right now. It is so low. Undiluted 1.56, fully diluted 1.75. When it is that low, it means that MicroStrategy is typically oversold and is mean reverted to the downside. And you see, we're slightly mean reverted to the downside on the daily, but we're really pretty much at the mean. Look at the volatility with MicroStrategy lately, guys. It's been gone. It's been relatively nothing. The last buy was only 155 Bitcoin with MicroStrategy, likely from the sale of STRC, which, if you guys will remember, I made a video on. I'll go ahead and link it right here, the STRC video. And you can go and check it out for yourselves. It's my new money market account because it replaced savings account, money market, and everything in CDs. It's 9% paid out on a monthly basis, 0.75, 0.75, so 75 cents a share per share every month. And for me, it's fully backed by Bitcoin. It's way over collateralized, much more over collateralized than any other preferred out there on the market. And so I'm comfortable holding that as my savings account, earning 0.75% per month on my money, right? And it's sitting pretty stable right now. We'll talk about that in a second. Anyway, that's where the sale came from to get more Bitcoin this week, to buy those 155 Bitcoin. So it didn't affect the price. I think this sell-off was after a nice little spike up here on July 16th when Bitcoin rallied, then Bitcoin pulled back, causing MicroStrategy to pull back. It's kind of starting to trade in tandem with Bitcoin, which the lower the MNAV, the more likely that is to happen. MNAV less than 2, I'm a buyer and I'm not looking to sell any of my MicroStrategy. MNAV goes over 2, I'm looking to either sell off MicroStrategy or sell covered calls against it. I will be making a covered call video this week on MicroStrategy specifically and how you can use it to basically pay for your house and all other living expenses through the sale of covered calls. You'll see on the 4-hour chart here with MicroStrategy, we are balancing right on the 50-day moving average. We're sitting on it like perfectly right here. And every time we've come down recently, we've supported on it. We did support on the 100-day, pinging off of it perfectly. Great green mean reversion dot. RSI was below 30 and the MACD crossed over. That's why we've got a buy signal down here. As soon as the trend flipped, that buy would have been at around 380 to 385. Would have been the perfect buy right there. Immediately went into profit all the way up to 415 and then pulled back down here to around 400. I still see MicroStrategy taking off as the year goes on. I think people just didn't understand the earnings and the implications of that. Right now, resistance to the upside remains 425. Next major resistance is at about 450, 460. So 425 first, then 450, 460 to the upside with MicroStrategy. Nvidia, there's nothing to say here. It just goes up to the right, up to the right, up to the right, over and over again since April the 4th on the daily chart. The trend keeps widening. It just stays thick. This is the only part where it thinned out a little bit. Other than that, nice, thick, upward trend, climbing to the upside. There's price targets that have been thrown out. 240, I don't know the time frame on it, but I wouldn't be surprised if it wasn't a year from now, so say the end of 2026. It sounds far-fetched, but you got to remember that Nvidia has already moved from 86 to 183. So almost a 100-point move. To get to 240 is only a 60-point move from where we are right now. So it's only a 50% increase from where we are now. I say only, but with AI and everything happening, anything is possible. If you look at the 4-hour chart, same thing, up and to the right. There's been a couple of slight pullbacks, some fake outs where it said to sell. Those might have been good places to sell covered calls, but you'll likely immediately fall right back behind the 8 ball. We have not been mean reverted to the downside. I remind everybody this every single week since April 24th. May, June, July, we're now going into August. It's been 3.5 months since we were mean reverted to the downside with Nvidia. That's how strong this move has been. Eventually, it will take a breather and pull back. Where will that be? Who knows? Right now, immediate support's around 174, 175. And actually, immediate support's around 180. then 173, 174. And then I would say it's down here where the 50-day moving average is, which is 160. Do I see us pulling back to that anytime soon? No. Next up is MicroStrategy Tesla pair. That pair was juicy for trading, and you'll notice that it's gotten a little bit flatter lately. Sure, there's been little moves to the upside and downside, but not these wild swings that we had before. That means that MicroStrategy and Tesla are starting to move in tandem a little bit more. That's why down here you don't see these giant mean reversion dots to the upside and downside. They're starting to level out. What do I mean by that? It's starting to compress a bit like this, where it's starting to tighten up. A lot of times, if it was an individual stock, I would say that signifies there's going to be a significant move one way or the other. In my opinion, we are starting to near the Tesla to MicroStrategy pair trade zone again. I know many people are following Invest Answers, who typically has been going only from MicroStrategy to Tesla. That's because he has a very specific goal of getting his Tesla position to a certain size relative to his MicroStrategy position. For the rest of us that are looking to grow both positions, swinging back and forth has proven to be very lucrative, particularly on these massive swings to the upside and downside. I think I was telling you guys last week that I had a student that nailed the bottom right here and nailed the top right there and gained, I think it was like 20 some odd percent, 30% more Tesla shares by going from Tesla to MicroStrategy down here at the bottom, MicroStrategy back into Tesla up here at the top. He increased his Tesla bag. Maybe looking right now, you know who you are, JBDC, Joe Biden's daycare. Maybe looking for another one right here, another swap right there to go back to the upside, because we are nearing the bottom of the linear regression channel. So keep your eye on that. I'm looking for a swap to swap some Tesla to MicroStrategy, especially in my tax-free account where I can immediately swap it back again if for some reason I'm wrong. Or again, if I'm right and it spikes back to the upside and I'm able to get, let's say, plus 15 or 20% more Tesla shares in the process. That's what I'm looking for each time I'm doing these swaps, is to grow the bags. I really don't care if it's growing the bags of Tesla or MicroStrategy. Those are my two big bets on the future right now, along with Nvidia. We'll move over here to the Strike, Stride, and Strike. You know what? Anyway, the S's with MicroStrategy, the strategy BS's. So the first one over here, STRK, this is the 8% perpetual preferred. It's starting to level out right now between 105 and 110. You'll notice it's been trading in that range for a while now. STRF, the 10% cumulative that's guaranteed payout quarterly. That one is right here, just settling in around 117 to 120 range. Then you have STRD. That's the junk bond one that's just trading up and down like crazy. It's been as high as 97.50. It's been as low as, I can't read it right here, as low as 83.69. But it has been trading at a discount to par value. But that's because people are actually trading this one. This is the one that may or may not pay out the dividend. It's non-cumulative. They don't have to pay it out if they didn't want to. And finally, the new kid on the block is STRC. It's in this bottom left-hand graph that you see here. And it is trading around $98.25. Keep in mind that STRC pays out monthly. The others are all quarterly. This one pays out monthly. It's 9% annual is the target, and a target range of between $99 and $101 a share. So they want to keep it very tight to par value, and it's getting close to par value. I was buying it at 94, 95, 96, 97. I sold all of my STRK and STRF, 100% of my STRK and STRF, and I bought STRC instead. I want the monthly dividend. I want it to act more like a money market or a savings account or a CD. I don't want to have to sit and wait. Well, CDs, you have to sit and wait. So more like a money market or a savings account where it's paying me monthly dividends, and I have my cash sitting there. That's the cash for an emergency, a rainy day fund. The rest is risk on, but there is a subset of my cash that I keep in there for a rainy day fund, and I'd rather earn 75 cents a share worth of interest every month on it than turn around and earn 0.1 in like a Wells Fargo account up to maybe 4.5 for treasuries or money markets, or a high yield savings account might pay 3.5 or 4. I'm earning double that. So by keeping it in STRC, that's why I'm using STRC. It's for the emergency cash fund. Finally, the rotation model had me move into MicroStrategy twice on my particular rotation model. And currently, we're still in MicroStrategy, with MicroStrategy at $401 in pre-market, looking like it bottomed out here like we talked about, and is on its way back up to the upside, up to the upper right. So that's where we stand with the rotation model currently. Guys, thanks for tuning in today. Make sure you like this video. Make sure you comment below. What did you learn today? What did you like best? What would you like to see more of? And subscribe to the channel, please. Share it out with your friends and family so they can increase their financial literacy as well. Remember, I teach courses on TradingView and technical analysis. If you want to understand these charts the same way that I do, take the TradingView and technical analysis course. It's over 5 hours of instruction that you can go through at your own pace. You have the ability to ask me questions along the way so that you can increase your learning. It's like accelerating your learning curve and learning by immersion instead of sitting there and trying to figure it out on your own. That's the TradingView and technical analysis course. I also teach a course called Understanding Options, where I teach you from terminology to the Greeks all the way through to trading calls and puts and combining them into more sophisticated strategies. All that's available at gdinerocoaching.com. I have a limited number of one-on-one appointments there as well. And finally, thanks for tuning in today, guys. I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in today, guys, and we'll see you next time.